Hey everyone, welcome back to Corporate Decoder, the place where we untangle the messy world of corporate filings. Today we're diving into a Form 8K from Armata Pharmaceuticals, and trust me, it involves more twists and turns than your average DNA strand. Get ready for a story of loans, agreements, and a race against the clock. Basically, this report is all about Armata Pharmaceuticals getting some new loans and making some changes to old ones. It's like they're rearranging their financial furniture, but we need to see if the new arrangement is actually better. Armata Pharmaceuticals, in case you don't know, is a company that's working on fighting bacteria with viruses. It sounds like something out of a science fiction movie, but it's real life for them. They're developing new ways to treat infections that don't respond to regular antibiotics. It's important to keep that in mind because funding research of that kind is hard. It's not your average widget company which might explain the deals they are doing. The key date here is March 12, 2025. That's when all the stuff we're about to talk about went down. The big news is they've entered into a credit and security agreement, which is basically a fancy way of saying they took out a loan with Innova Strategic Opportunities LLC. This Innova is a major shareholder of Armata, so it's like borrowing money from a friend, but with a lot more paperwork. This new loan, called the March 2025 Credit Agreement, is for $10 million. The interest rate is 14% per year, which is pretty high. You usually see numbers like that when a lender thinks there's a higher risk of not getting paid back. They have to pay it back by March of the following year. To make sure they get their money back, Innova is getting a guarantee from Armata's subsidiaries, meaning if Armata can't pay, the other parts of the company are on the hook. Plus, the loan is secured by basically all of Armata's stuff, which means Innova can take their assets if they don't pay. The agreement also has a bunch of standard rules called covenants that Armata has to follow. This includes how much debt they can take on, what they can invest in, and whether they can buy other companies. There's also a clause about what happens if something really bad happens to the company, something that could seriously hurt their business. But wait, there's more. At the same time as this new loan, Armata also changed the terms of some older loans they had with Innova. These changes, called the amendments, basically push back the due date for those loans to March 12, 2026. This section just points back to the first section, saying that the new loan counts as a direct financial obligation. It's just a way of saying, yep, we really did take out this loan. This part is about how Armata announced all of this in a press release. The company wants to make sure everyone knows about the new loan and the changes to the old ones. This is the actual announcement the company put out. It probably spins the news in the best possible light, but we've already dug into the details, so we know the real story. So what's the big picture here? Armata Pharmaceuticals is taking on more debt. The interest rate on the new loan is pretty steep, which suggests that lenders see them as a risky bet. At the same time, they're pushing back the due dates on their old loans, which gives them more time to pay everything back. This could mean a few things. Maybe Armata is struggling to make money and needs more time to get their products to market. Or maybe they have a great opportunity on the horizon and they need the extra cash to make it happen. Looking at all this, I'd say Armata Pharmaceuticals is at a critical point. They're betting big on their technology and they need to start seeing some results soon. The high interest rate on the new loan puts a lot of pressure on them to succeed. On the other hand, if they can get their products approved and start generating revenue, they could be a huge success. It's a high risk, high reward type of play. The fact that Innova, a major shareholder, is willing to keep lending them money suggests that they still believe in the company's potential. But it's also a sign that Armata hasn't been able to find funding elsewhere, perhaps due to the risky nature of drug development and the fact that it takes a long time to reach profitability. In conclusion, Armata Pharmaceuticals is a company with a lot of potential, but also a lot of challenges. They're in a tough industry and they're relying heavily on debt to keep going. Whether they succeed or fail will depend on whether they can turn their innovative technology into real-world products that can generate revenue. For now, it's going to be a bumpy ride. Thanks for watching. If you enjoyed this video, please like, comment, and subscribe for more deep dives into the world of corporate filings. Until next time, stay curious.